This is a true challenge for the industry.
This is a market for fast learners.
Yeah,
You have to adapt all the
absolutely.
time. I'm not sure what will happen. I don't know. I don't know what will happen, but I can definitely say that there will be a lot of changes.
What a beautiful day to be here, joined by Jacob from Tricomas and Justin from Script. My name is Iskander. I'm going to moderate this conversation. I work for OKX and I run the institutional business. And I'm really interested to hear your views on what's the progress the industry has made in institutional adoption of crypto. What are the challenges? And more importantly, how does the future looks like? But before we go into all these topics, maybe Jacob, would you mind just introducing yourself a bit about your background, how you got here?
Yeah, sure. Thank you, Isk. Thank you for having me here. My name is Jacob. I'm from Tricomas, and many people know Tricomas as a trade automation tool and trading bot software, which is out there in the market since 2017 and gained quite a lot of traction. We have tens of thousands users. We have billions of trading volumes each month across various exchanges and, of course, OKX. And recently, as market structure changes towards more institutional adoption, we started building our new product, which is Tricomas for asset managers. And this is a product which helps asset managers to manage multiple accounts within the same strategy in a very seamless and easy way across multiple trading venues and mitigate all the risks and inefficiencies of crypto markets that I'm sure we're going to talk about today. Yeah, and myself, my background comes from traditional finance. I worked for quite a lot at traditional exchange, at Moscow Exchange, and then I joined OKX and worked at OKX for some time, and now I'm at Tricomas. So, thank you.
Looking forward to your insights, and already a lot of jargon you've thrown in there. So we're going to double click on some of those topics hopefully later today. Justin, welcome.
Thank you. Thanks for having me here. My name is Justin. I'm from Script. We are Swiss-based. We have a OTC trading business and asset management license, which asset management business, which we got the license last year from FINMA. So it took a while, but we got there. So in Script, we try to be a one-stop shop for institutional clients. They can come to us to do trading, staking, and also custody their assets with us. We've been live from 2021, trading cryptos for clients like from family offices, banks, traders, and also we face different exchanges becoming their LP. So yeah, we've seen a lot of development in the crypto space. Back then, it's crypto was so largely inefficient, but we are getting to a good place. And with the rise of different things like the adoption of ETFs by institutions, it's really a good sign, and really excited to be here to talk about these topics and see different things that we can develop together.
Yeah, great to hear. So why don't we go back a couple of years in time? So if I would have asked you how would crypto adoption look like for an institution, would you be able to describe in a 30, 60 seconds what it was, Jacob? So 2021, I think is a good starting point to use. An institution comes to you, says like, I want to trade crypto. How did that look like at that point in time?
Well, that's a good question. I think there's a big difference of crypto markets compared to traditional markets, traditional finance. That crypto got its first adoption from regular clients, from traders, from individuals.
Yeah.
And then with the market developing, it got to the point of institutions coming to the market and institutional adoption coming, which is quite unusual because as far as I know, at least, all the traditional finance markets, they went other way around. First, institutions making the market, and then retail or B2C or individual traders getting access to this market. So crypto is very unusual in that regard. And I think 2021 was sort of a milestone when these wide institutional adoption started to happen. And we've seen both crypto-native institutions appearing and rising on the market, and traditional institutions coming from traditional markets. They also started, having their crypto exposure, testing the waters, seeing how it goes. They found market from what I've heard from the feedback that I've heard from these clients. They found crypto markets being very unusual, to say the least, compared to their experience in traditional markets. It is very different. I think we will talk about this a lot. Let's say the liquidity fragmentation, the market inefficiencies that Justin just mentioned. That was a really wild west of market. I think it tends to get more organized, more structured,
That's
more
how it looks now.
efficient.
Yeah. But I agree with you. I think a lot of people forget that the real innovation in crypto was driven by retailers first.
Agree.
And then institutions followed. You saw the same pattern, Justin?
Yeah, I think it's we all started somewhat from the same starting point. We heard of crypto, and then we started just trying to trade like a retail trader in the past, I guess. And it's really unique, like what Jacob mentioned. Like everything started from retail, and then kind of go upwards to institutions and everything. And it is also retail, or like the investors of all mutual funds or like hedge funds or like investors in all these bigger institutions that are pushing them to get some crypto exposure, get that 1 to 5% crypto exposure, increase my risk adjusted return by X%. And yeah, it's really interesting just seeing this this shift and this demand coming from the people as a whole, pushing institutions to adopt crypto is really fascinating. And yeah, we do see kind of more traditional institutions wanting to get into crypto, but the thing that they always have in mind is what is the risk? Are we taking care of every aspect of risk, like custody risk or hack risk, smart contract risk? Everything has to be well accounted for, and we're getting there. But we definitely see that demand. You can see also BlackRock building proper infrastructure, not just to trade Bitcoin, but other cryptos as well. And that's really a positive sign for us as well.
Yeah. So that's an evolution that happened, right? So if we just summarize, we start off with retail traders, benefiting from the properties of cryptocurrency. It might be speculation, it might be for other utility purposes. Then you see, I think, the traders, the trading community, professional traders, seeing the money signs, right? It's like, hey, there's some good money to be made, diversification as well from other asset classes. And then I think that has grown. So, we fully subscribe to that model. So if today an institution would knock on your door, so Justin, you already mentioned, custody, your wallet security, your cyber security in general. What else, Jacob, would you maybe add to that list of, tick the boxes before they would even consider getting into crypto?
Well, I think the risk management is very important here, because the market is very different from traditional markets in terms of how it works, how it's regulated, and it's in very early stage of regulation, and meaning that the way markets behave, the volatility of the markets, again, the liquidity, fragmentation, institutions really need to take into account all these factors and build their risk management strategy according to this, and use the proper tools. I mean, it's not just the strategy; it's an execution that is needed.
Really, really important.
Yeah.
So, So you mentioned a couple of times trading bots. You said
Yep.
risk management. You mentioned tools. What tools do we need to think about nowadays? To make crypto adoption easier for institutions. What is a typical tool?
Yeah, I would say because of the nature of fragmented liquidity in crypto,
Yeah.
like for example, having an OEMS helps to just aggregate that liquidity, and you get to trade at size without having too much of a slippage or affecting the market too much. I think those are really important from a trade execution standpoint.
Yeah.
But also on top of that, just how you would execute the trades. For example, if you can have an off-exchange custody solution, but you execute it on exchange, this kind of setup makes a lot of sense and really gives a peace of mind to investors because there are, in the past there were incidents where exchanges were affected. So yeah, because from an institution standpoint, they would also always ask where are my assets, and if something happens, what's going to happen to my assets? Do I have any protection? How can I limit my downside? That's really how institutional investors view crypto investments as a whole. That's how we see it. So it's more are we accounting for all kinds of risks? And if something happens, are we ready to mitigate it, reduce the losses incurred, etc.? I think that's really important.
Yeah, I think over the last year and a half, we have seen huge progress in the markets towards safeguarding assets. So, what I can think of, the proof of reserves reports that a lot of exchanges monthly put out. I think OKX was one of the first doing that, and we're still doing that on a very regular basis. You can self-custody, obviously. I think that's a good, a good way. And then we have the, you just touched on it, the tripartite custody solution. So getting, banks, specialized custody providers in the framework. So that's safeguarding assets. Anything else? You mentioned risk metrics and tools, and I want to dive a little bit deeper into that.
Yeah, exactly. So, and Justin mentioned as well that the liquidity fragmentation and the way the market works. So you need to automate your trading. I think one of the biggest thing about crypto is it is I would say it's algo native.
Algo native.
Algo native type
of asset. What do you mean by that?
Yeah, because so let's think of this from this perspective. In traditional markets, there is still a lot of place for non-algo strategies, non-algorithmic
Click and
strategies.
trade.
Yeah, click and trade. Yeah, exactly.
Click and trade.
There's still a lot of space for this in traditional finance.
Yeah.
While in crypto, I think that most of the institutions, they do deploy this or that kind of strategy, automated strategy for their trades, and this can be as complicated as a fully autonomous strategy that is running using AI agents and frontier type of technology, as well as very simple things like execution automation when you need to execute large chunks across different venues, because again, we've mentioned this, there's a huge liquidity fragmentation, and if you want to avoid market and price impact, then you need to work smart with your execution. And here where the automation tools come in handy, and that's what we are doing basically at 3Commas. We give that kind of tools to institutions, and it really helps to mitigate these risks.
So if I just summarize, so instead of a trader going on a screen, put in the order, and then click and trade, you provide an algo designed by your quants or your smart guys, right? Where the innovation comes in with AI. They put in an order, they check the parameters, and then the order will be executed on the markets.
Yeah.
Is that how that works?
Right. We do provide tools. We do not provide strategies itself. So we don't say how to execute the strategy, what should be in this strategy. We give a tool that helps to implement any kind of strategy that you have in mind as a trader. Yeah, and that's how it works. Yeah.
Excellent. Great to hear. Would you do anything else? Justin, is your company doing anything else? Jacob just introduced a new term to me, algo native.
Algo native,
Is there a human touch as well involved, or doesn't that exist in crypto?
In what sense? Like, what do you mean, like human touch?
So I'm a simple trader. I want to buy something. Sometimes I just buy, click and trade an equity on the screen. Sometimes it says call the support desk. I call the support desk and I put in an order. Is that similar for institutions in in your setup?
No, definitely no. Just to add, I'm sure in free commerce they are doing the same. Like there's some sort of a liquidity aggregation, and what I mean by that is that we're actually aggregating all the order books from different LPs, venues, and everything. So in terms of just like one-click trade, I think that's what you're trying to say.
Yeah.
It's optimized, but to a certain level, like if you're trying to like execute large sizes, like let's say 100 Bitcoin, yeah, you got to rely on algos, break into different chunks, send it to different venues, and yeah, that goes into like TWAP or VWAP algos, things like this. I think that's from what we see, that's how institutions usually like to trade.
Okay, understood. So is it fair to say, I mean, both of you continue to mention liquidity fragmentation, and I've been avoiding that a little bit, but let's talk about it. So how many different pools of liquidity sources are out there? How many pools? So are we talking about, are there 10 different venues, 100, 500? Can you give me a feel of that? Jacob, I mean...
Okay, yeah. I think it's a good question to Justin as well, because he's the user, the end user of this liquidity spread across different venues. From what we see, again, it comes to comparison with the traditional financial markets, and we see that the number of let's say significant exchanges is way higher compared to traditional finance. So we have tens of quite big exchanges that you need to take in account when you plan your strategies and your execution and when you're looking for liquidity. Now, there is also an OTC market happening, obviously, in crypto. There are a number of ECNs appearing throughout last years. I think for last 5 years, this is some sort of a trend. And again, there is a DeFi space, which is something totally new compared to what is present in TradFi.
Yeah.
And I guess Justin has to take in account all these liquidity sources when executing his strategy.
Yeah.
And and we see this, and we understand this need coming from clients to account for all these liquidity sources and execute smartly. So that's why we build all this, all these different connections to different exchanges, for instance, and provide them to clients. But I think that if we look a little bit further in the future, with all the changes that we have right now, with regulation coming in and structuring the market more, and with traditional financial players coming into the market more and more, I think crypto will tend, to shape the way the traditional markets are shaped with specific things like DeFi. But at the end of the day, there will be few large venues like OKX, for instance, on exchange for on-exchange execution. There will be several ECNs for off-order book execution. And there will be and there will be DeFi space.
Yeah. No, I think you mentioned a lot of TradFi jargon, OTC venues, ECNs, and I think that's the innovation within crypto. Well, the speed at which crypto just grab all these concepts, put it together, and then actually innovate on top of that. I think that's what we see happening. I did a quick Google search last night on crypto venues, crypto liquidity, and I think you can easily find over 400 different names. Who provide crypto liquidity. So, I mean, I guess, Justin, it's a fair comment to say that this is a true challenge for the industry. What does it take to change that, to see consolidation? Or is maybe your view the crypto market will continue to fragment because people could continue to drive innovation, and hence it's very difficult to box everything into one place?
Mm-hmm.
What is your view?
Yeah, I think like just the nature of crypto itself, it's like giving like the people the ability to trade from their bedroom. Anyone basically can trade today with crypto, right? So just if we wind back time back to 2017, I was personally doing like latency arbitrage, things so you buy on one exchange and sell on one exchange, and during those times the spreads were huge. You can make like 1%. That was really good days, and then it started going down and down. But what I'm trying to get at is when let's say if we are here today, there's a new exchange coming up. People are gonna exploit that inefficiency because there's not enough participants there, everything. So these people that are exploiting the inefficiency are usually less regulated, and they don't care about whether it's regulated in somewhere or they don't care about the exchange rates, or they don't care about anything. They just care about pure P&L. I mean, to be fair, there's a price for every risk you take. But yes, so with this I think now we have 400 exchanges. Maybe in next 6 months, a few of this, let's say less regulated, smaller exchanges might rise up, might fall. It's competitive landscape that's always evolving. But I see it as just healthy competition and healthy liquidity building up.
Yeah. I think that's an interesting observation. So you mentioned regulation. Is that a challenge, or is that the way to get the industry to the next level? Jacob, what do you think?
I think it's both a challenge and opportunity for the market. I mean, for anyone who's either got his license recently, congratulations to you with your MiCA license, or on the way of getting this license, everybody will agree that this is a really complicated process. It takes a lot of time, effort, and it is challenging. So from this perspective, it is a big challenge with necessity to obtain licenses. That wasn't the case previously. On the other hand, I think that more regulation will bring more clarity to the market and will bring
Absolutely.
more liquidity. So think of this as right now, I think the total market cap of all crypto is around $3 trillion, something like this, give or take. And the total capitalization of TradFi equity markets, I think it's 300 trillion. So it's 100 times of crypto. And there's a huge opportunity of institutional demand coming into crypto market, and the market cap of crypto raising with this inflow, and this can happen only with a clear, stable, more transparent regulatory framework across the world.
Yeah, I think everyone in the industry will subscribe to that. You need to build trust. You need to be transparent. Regulations will definitely drive that in this industry, and will support the growth in the end. What other challenges do you see, Justin?
Mm-hmm.
So we spoke about liquidity fragmentation. We spoke a bit about regulation. What is the other challenge, on the doorstep of Script?
Yeah, I think we deal with a lot of Swiss clients, like family offices, institutions in Switzerland. A lot of times they want to get into crypto, but they still need a bit of education. They need to know how do we trade crypto, what is Bitcoin, and sometimes I think education is really important. So there are times that we just put on a presentation to walk them through, like how custody works in crypto. You have self custody, you have different other custody solutions, and it's just that education to get them to buy their first Bitcoin, and then like gradually bring them up to speed with what industry is already offering.
Yeah. I think that the market is very different from what they got used to, and they really need to learn. I talked to one of the family offices managers recently about his experience of entering crypto, and he was really frustrated with how complex things are.
It is.
And it is both on the technological side, it is in the diversity and variety of different
Yes, it really is.
types of assets, and the way you deal with these assets. I mean, the custody thing is very important. And then the on-ramp and off-ramp thing, it is really big challenge. Still, crypto is regarded with many traditional, financial institutions. Crypto is regarded as something, on the edge of being acceptable. And when the traditional family office, I don't know, maybe Justin, you can share your experience, but from what I've seen, when traditional family offices, they come to this market, they experience huge difficulties.
Yeah,
onboarding.
it's not just simple transferring your dollars from your bank account into an investment account. There's some steps involved.
Yeah, I think like just the mindset is also different, more conservative. Like for us who were lucky enough to be part of the crypto bull run, we got jobs and we are trading cryptos. We are very fortunate. I think the mindset for, let's say, more crypto native people are about how much can I make.
Yeah.
But like from institutions is different. It's like it's about how much can I lose. Like what is my worst?
Of course.
What is my
Yeah.
worst risk? And they are they have to account for that, and trying to like understand crypto from a TradFi perspective has its challenges. And we need to try to speak in a language that they can relate, they can understand.
Yeah, so what I always say is that, it's one thing losing your own money. It's completely different ball of game when you lose someone else's money. It's very, very different losing someone else's money. So just to wrap up this conversation, and I think I heard a lot of interesting things. So would you mind summarizing, if you had to paint the next 5 years, or maybe let's say the next 3 years, for the crypto industry, how does the future looks like? Jacob, why don't you try to give a go at that?
Oh, it is such a difficult task, to predict the future. I think that, all in all, the future is bright.
The future's bright.
As weather here on Malta. But the markets are really changing so fast. The technology is changing so fast. We haven't touched on this really, but I think AI tools and technologies related to artificial intelligence, they will really affect the market in a lot of different ways, both in the way, let's say, traders interact, understand, and trade on the market.
I think an AI tool can help to make the educational process easier, quicker, maybe.
Yeah, because it brings down, the complexity of all technology to very understandable human-like communication that you can actually use with AI tools. And now the other side of this is autonomous AI agents that some people say will rule the market and will trade.
Yeah, and no one will have a job.
Yeah. So I'm not sure what will happen. I don't know. I don't know what will happen, but I can definitely say that there will be a lot of changes. And this is a market for fast learners.
Yeah,
you have to adapt all the time.
Absolutely.
And the market will grow. So if, let's say, you asked about back 2021, someone could say that okay, crypto is here, but will it stay here for next 5 or 10 years? So there were questions like this back like 3-4 years ago. I think right now there is no such question. Crypto is here, it will stay. It is an established technology, it is an established asset class, and it is just continues to integrate into financial infrastructure of the world.
Absolutely. Do you concur with that, Justin? Anything to add to that vision?
Yeah, I definitely agree, and I also think like there'll be more crypto adoption going into the next 5 years. We see a lot of institutions coming in, big players, starting to get their feet wet. BlackRock building their infrastructure. Different funds are starting to allocate into crypto, like in a sense that when there's an economic demand, like regulations will try to keep up as well, and that kind of makes the whole ecosystem safer for retail traders and just normal people that just want to get into crypto. I think the future looks bright. I think adoption is going to get better in the next 5 years.
Super.
Yeah.
Well, thank you very much for today. It was really interesting. I've learned a lot. I hope the audience have learned a lot as well. Thank you very much,
Thank you
Justin
very much.
and Jacob.
Thank you so
you.
much.